So if you are a business owner, should you be putting money aside to pay your taxes? Taxes being income tax you might be owing, or goods and services taxes. Here in Canada, we have goods and services taxes called GST, which is a federal tax. You might have maybe a state tax or a provincial tax. Here where I live, we have a provincial sales tax. And so if you are a business making sales, you're collecting revenue from your clients, and typically you're going to be collecting some sales tax on those sales. And then you are expected to pay those collections forward to the appropriate government. And then maybe at the end of the year, you're filing your taxes and you might have some income tax owing as well. So does it make sense to put some money aside to make sure you have enough to pay those remittances, to pay those tax amounts owing on your tax returns? I would say the answer is typically yes. That's probably a good idea to put some of that money aside to make sure you can pay those. And it can depend on the nature of your business. Your personality type even is important. You know, some businesses, they don't really need to worry about that so much because they're always going to have, you know, a pretty good cash balance and, you know, a float available to pay those things. Whereas other times, maybe a business is not really keeping much, cash in a checking account and isn't able to pay those things. So in that case, they probably should really create kind of a designated savings account to put that money away. Another thing would be, as I mentioned, personality type, where some people, you know, I've known would just get extra money taken off their paycheck in taxes just so they would get a better tax return. That just worked better for their psychology, kind of as a way for saving. So for me, I would rather have the money up front because I've always been good at saving. I like investing my money. I'm strategic with that. So I'd rather have it up front than use it as a way to force me to save. So that's something to take into consideration as well. The nice thing is you can kind of forecast how much you're going to be owing for, you know, provincial tax or federal tax or state tax, and even for income tax as well. And so you can, you know, have that kind of side savings account with money put away to make sure you're going to be able to pay it when it comes up, because you really don't want to run into a situation where you get behind on paying that money back. I've seen it before where businesses get behind on their federal goods and services taxes remittances, and then it becomes kind of a disaster where if they're seeking loans, lenders aren't going to want to lend to a business that is in debt for income taxes or sales taxes. So I would really avoid that at all costs if possible. But ultimately, yes, I think generally it is a good idea. Really good idea for some businesses, maybe not necessary for other businesses, but just something to think about, you know, kind of gauge your situation, your business, your personality type. It never hurts to be strategic like that, you know, better to be safe than sorry. And so hopefully that was helpful. If you have any questions, feel free to leave a comment in the comment section below. I make videos on business startup topics and business management topics. If you like the video, you can click like. If you want to check out my other videos, please go ahead and do so. Subscribe to the channel, and thank you for watching.